There we go. Live streaming. Maybe we're going to be able to do it. Oh, this meeting's being live streamed. Got it. It's
And
value
we're
after
live.
hours. We did it on time. Crazy.
Church.
Bill Brewster, Jake Taylor, and I'm Tobias Carlisle. This is Value After Hours. Haven't done a proper intro for a while. We do these like stumbling intros. What are we talking about today, fellas?
Billy, what you got?
I think that we're probably going to talk a little bit of bubble talk.
All right. That's good. Grantham, I assume, is involved. I've got a piece that's probably going to tie in nicely only through sheer coincidence and accident, which is going to be on mass extinctions.
Cool.
Yeah.
that makes me a little bit nervous.
Yeah, we'll see.
It's an ominous episode today.
Well, I got some good news because I got some priors that need to be confirmed. So I got Grantham, GMO's got their letter out defending value, even though it got had a pretty good run for a little while there. It's all been beaten up and growth's back, monsters back from the dead. Grantham, GMO's got some thoughts. They say it's okay, just relax. Value's money good. Who wants to go first? Who wants to take it away?
Let's start with veggies.
All right. It might be set the table for it. So mass extinctions, I'm going to start the episode off by saying, you guys know about the supposed 65-ish million years ago, whenever it was, that the meteor hit Earth and killed off all the dinosaurs, right? And
I know about the great bull market of 2016 to 2020 that mass extinct value managers.
Yeah. All right. Come on.
Kill all the dinosaurs.
Too early for that.
Sorry.
We'll get to that.
I couldn't resist.
When you started that up with the allegedly 65 million years ago, is there a new twist to this?
No. It's more that I can't remember the exact number.
Okay.
So
Okay, good.
There.
So I'm without answering, and people can chime in the comments if they want on what they think the answer is. But from the time that the meteor hit, how long do you think it was before there was the mass extinction? Okay, so don't answer that. But let me now set the table a little bit more, and we'll follow up and we'll close the loop and give you the answer on that. So
what you're saying is, how long from the whatever the event was, the meteor striking Earth, did all of the dinosaurs die out?
Correct.
And we can't tell you. I happen to know the answer because you told me last week, but I won't tell anybody else.
And by the way, like 70% of all of the species disappeared in this time period. So that's what we're kind of measuring. So let's rewind the clock a little bit further back. And call it roughly 4 billion years, we basically only had invertebrates, single cell organisms swimming around in the ocean. There's nothing really that we would recognize as sort of like complex life today. And what's hard about that is that we didn't really evolve anything at that point that would leave anything behind, right? So it wasn't until about 600-ish million years ago that life started actually evolving things like shells and whatever that would last longer and then be till today when we could start to look at it. So all of our evidence of life, of what things actually look like, is kind of pinched a little bit on the evolutionary time scale, because nothing lasted, that was before 600 million years ago. So it's kind of an interesting idea. But in that 600 million years ago, we had the Cambrian explosion, which is, most people have kind of heard of that. And that actually is what starts the fossil record, because there was nothing left behind before that. So in this last 600 million years since the Cambrian explosion, there have been 5 distinct mass extinction events. And that's how they actually mark geological periods and kind of create a calendar for mass geology, is from these 5 extreme events. And the biggest one was actually 250 million years ago, and that ended the Permian era. And that actually wiped out between 80 and 95% of life on Earth, in both on land and in the oceans. So, I mean, just an absolute killer.
What caused it? Crypto or something like that?
NFTs. It was NFTs.
Clearly,
I'm not sure if we know the answer to that, actually.
Okay.
So 1/3 of all species that have ever existed have been wiped out by mass extinctions. And then the other 2/3 of species that have been wiped out, which actually represents almost all species, because 99% of species have expired that have ever existed, right? So we're in this lucky little 1% today. 2/3 have been wiped out by lesser events. And the lifetimes of genera, which is the plural word for genus, they follow a power law, as you might expect, like earthquakes. So most of the time, the lifetime of a genera are relatively short, like lots of little earthquakes that happen. And then there are the occasional very long-lived ones. And likewise, the events that wipe out life follow similar power laws, where most of the time it's little things along the way that get wiped out. And then there's the occasional mass extinction that does a pretty big swipe. So the one we're going to talk about more specifically is called the KT boundary, and that's this meteorite that hit near the Yucatan Peninsula, Gulf of Mexico. And kind of funny story, like that KT boundary is actually the boundary is the time on before it was called the Cambrian, and then the Tertiary. And so you're like, why isn't it CT? But apparently they used CT somewhere else. So they used the German word for the K, which was like Crede or something like that. So that's why it's the KT boundary, because it was spelled with a K there. So imagine this 10-kilometer wide rock smashing into Earth near Mexico. And what's interesting is that it shot up, like all of this dust and rock into the atmosphere. And we can actually see that. So normally in most of the Earth's crust, iridium is pretty rare element, but it is found often in meteorites. And so what they found was that there's a thin layer all around the globe of iridium that matches up the strata of the time period to match that 65-ish, whatever it was, million years ago. So this kind of gives us that's a pretty good indication of kind of what happened, like the pieces fit together. So imagine it shoots debris all over into space, and then all of that stuff just comes crashing down, almost like intercontinental ballistic missiles all over. And the heat that was created is just absolutely insane. Like it spread this worldwide heat that was roughly 10 kilowatts per square meter all over Earth. And so it's kind of been described as like, if you had set the oven to broil for like several hours, that's what Earth was like for a while. That's pretty rough. Yeah, you probably don't want to be a part of that. And then tiny dust particles are spread all around the Earth, and they block out the sun, and then it kills off everything that had photosynthesis as its way of making a living. And it actually then led into a temporary freeze of the Earth. So you like put the oven on broil, and then you set it to freeze. So back to our original question, how long did it take for this sort of process to play out from setting to broil versus, freezing the Earth and killing off 70% of life on planet Earth?
How long did the broiling
several hours, supposedly, for that part.
I reckon you're done after the broiling.
Billy?
I'm not guessing on this. I will get it so far off. I've been reading Think Twice. I know that it probably, my guess has something to do with my fucking phone number, and I'm not going to do it.
You're anchored to some bad number.
Yes, I'm not doing it.
Okay. Well, I'll spoil it for everybody here now that everybody's had a chance to put their answer into the comments. The answer is between tens and hundreds of thousands of years for it to play out. So, I mean, when I first read that, I was like, holy shit, my intuition was just so far off on that. I would have thought, I don't know, months maybe at the longest, right? Like I'm off by multiple orders of magnitude. All of which is to say, and like, by the way, that's a very, very short sliver of time in geological time, if you're measuring it. That is a blink of an eye. So all of which is to say, I think that time frames often, like stuff just takes longer than we would ever imagine it takes. And I think about that with suffering through a value, wandering through the desert. I think about that with perhaps the internet changing business and how life happens and how commerce happens. I think the meteor hitting in 99 or whatever it was, or maybe a little sooner, of the internet, taking over, I think it might have been right. Like that, I think it's obviously things are different now with that. But I mean, we're 20 years into it now, and it's only kind of becoming clear that, oh yeah, like it actually really is totally different, and things are quite that 20 years seems like forever, but maybe in the grand sweep of humanity and commerce in general, that could go back, probably tens of, if not hundreds of thousands of years. I mean, 20 years is, again, a blink of an eye. So all of which is to say, like, our scale of how things quickly they should be moving probably is off pretty often. And then therefore we probably need to recalibrate and just really think about, like, boy, there are things that happen on very slow timelines, even though they're very important. And it's hard for humans to, like, we're not really wired and programmed to notice those kind of glacial changes. And we're more following a linear antelope across the savannah. And that's sort of how we've been programmed to view things. So anyway, just be patient, I guess, is the bigger takeaway, and try to think in the appropriate timescales.
Is Toby frozen? I think Toby's gone.
I'm sure he had something incredibly insightful and pithy to say.
He definitely seems like he's thinking hard. I hope that our whole show doesn't. Oh, there he is. He's back.
I'm sure you caught all those words of wisdom, huh?
I just couldn't respond. I had some nonsense to say. I thought my screen had frozen up.
Okay.
Yeah, I guess that's the Bill Gates has got a great line where he says we underestimate the impact of technology in the long run and overestimate it in the short run. I think it's Bill Gates.
Sounds right.
It does sound right.
I think that's true for the internet. Like 1.0 was sort of overestimating what they were going to achieve. And then second go around, they've definitely been like, they're all much better businesses than they were the first time around.
We're already on 3.0, dude.
Web3.
Yeah.
Is that blockchain?
I believe so. I need to beef up on it.
I mean, that sounds great to me. Like, let's cut out these middlemen.
Yeah. I like the idea of Ethereum just owning the software, and that's it. I heard that sales pitch and I was like, I kind of like that. Now I just need to do the work.
How do they own the software?
Well, like
do you have to buy the coin?
It's got gas involved. I don't understand it yet, so I don't want to really talk about it. It would just expose my ignorance.
You know more about it than I do, so that's how far away we are from this.
I mean, I think there's like a base layer, and that's what you
don't
can
do
own
it, Bill.
pieces of, and
stay
then
away from the edge.
Fair enough.
What was it that eventually called the dinosaurs to die out? So it wasn't the broiling and then the freezing. It was 10,000 years later when what happened?
Well, I have to think that, I mean, so if you imagine ecology as this web of energy transferring, survival of the fittest, it is a nonlinear system where if you can take out a piece of it somewhere and you really don't know the upstream or downstream effects of it, it's very hard to tell, just like any complex adaptive system. Similar to, let's use the age-old analogy of like the sand pouring onto a table, right? Like you never know exactly which sand is like granule is going to be the one that tips it over. And similarly, you really don't know which, all of these systems, they live out right on the edge of chaos. And so, oh, by the way, this piece that I wrote or put together today actually came from a book called Deep Simplicity by John Gribben. And it's, so like, I think it was 2004 or 5, it came out, and Munger actually recommended it during one of the meetings. And so it was like, it's quite good actually. Like I've read most of the concepts before in different books, but then the way that he ties it all together, and then the analogies that he uses and how he explains it, maybe one of the best physics books I've ever read. Quite good. So anyway, yeah, I think it's like, just like anything, like, moving, you just really don't know how this web is going to break down. And, you put that kind of stress onto a complex adaptive system and you're going to have huge change.
Is the introduction of the internet and the web, the sort of the analogy that you'd use for the difference between two eras, where there's all of these dinosaurs. Well, is anything really not web based anymore?
Yeah, I think there's still plenty of service businesses that don't have much of a web presence these days, but it's kind of almost table stakes anymore, right? I don't know.
Their back ends better be somewhat technology focused. Otherwise, you're screwed.
It's hard to imagine the cost structure being competitive if you don't have some of these tools of, especially if labor is kind of getting more expensive, which seems like it's kind of a reasonable expectation.
Yeah.
Labor had its day yesterday. That's it. One day a year.
Yeah.
364
I don't think so,
capital,
man.
baby.
364 capital.
I think it might have a couple of years here.
Yeah, I think so too. I think the pendulum swung a long way in one direction. It seems to go back in the other direction historically.
One would kind of hope maybe from a guillotine risk perspective that labor has a little bit more, has some time in the sun.
Yeah. Yeah. Labor and supply chains, both in short supply right now.
What is it about the supply chain? So why does it continue to be so jacked up in just random places for everything?
I think everything was run so efficiently that you can't just stop it and then start it again. I just don't think there was enough slack. And then, you still have a ton of people that are quarantining. You got countries that don't have shots in arms. You got bad outcomes. Like, you can't, this whole thing's a mess. Dollar Tree doesn't think it's going to be solved until 2023. I've said it before, but drive by a car lot. Like, go look at I drove by a Mercedes dealer the other day and I looked in. They don't even sell Mercedes. Like, they will hawk any car that they possibly can sell.
Really?
And and the Northeast just got flooded. So all those cars are taken out of the, I mean, I don't know. We'll see. Mercedes came out with an announcement. They said no V8s for this year because they can't get the parts, or like the supply chain's all messed up. So 2022 is going to be a V8-less year. There's a ton of things going on. Yeah.
2022 is V8-less.
Yeah, they're not going to make any. They just can't do it.
Crazy.
Yeah. So I mean, I don't, housing, there's huge shortages. I know that we talked about this yesterday, or last week, but read DR Horton's earnings call. I mean, they literally said, like, the price is not the impediment right now. The impediment is getting the labor to build the houses and the supplies. So, I mean, there's like very real shortages everywhere.
It's not good.
Labor have to be.
Huh?
How skilled does that labor have to be?
Well, I don't think it has to be that skilled. I mean, one might ask, like, is this the consequence of 4 years of saying people aren't allowed, keep people out of the country? I mean, that was kind of the policy that Trump ran on, and he had a very anti-immigrant, at least message. I don't know enough about that policy to go in and know exactly how it all worked itself out. But, they may have created a pretty big labor shortage. Maybe not. I don't know.
I think we could also push some blame on the other side as well, that we encourage people to pursue educations that may or may not have a tremendous amount of economic value. And we might have been wise to encourage a little bit more of people going and to do the trades and learn actual skills, like how to weld. And that probably would have been smart.
I think framing is in short supply. I don't think that that's a big skilled labor. I definitely think somebody in the comments is inevitably oh, what about stimulus payments? Yes, I think that has something to do with it. Imagine that it's a complex system. There's probably multi-varied
explanation.
Yeah. So I don't know. It's just, what I do know is that stuff is messed up. And this is kind of why, and we go back to it a lot, but this is kind of why I didn't want the airlines to have to fend for themselves, because I think if you do this, if you ruin the aero supply chain even more than it was, like I was really worried about what does that do for 5 to 10 years? And like once labor atrophies, once your skills atrophy, how do you bring people back into the labor market? That gets really tough. I don't think our system had us enough slack in it to come back quickly from a huge shock, especially not when people get a ton of stimulus payments, right? Because demand, if anything, went up. Like if you look at retail comps, they're crazy. Retail comps exploded. So like that, there's a mismatch there.
Bill, do you want to do your topic?
Yeah, we can. This is like, I guess it ties in nicely. Grantham's Everything Bubble. I listened to the podcast that he did with Consuelo Mac 3 times.
Stay away from high places.
Well, I tried to like really think about what he was saying. And I mean, he's clearly out there on this bubble call, and he's done it, you know, pretty successfully, I guess, in the past. I think that if I can boil it all down to one variable, his argument is like, so Schiller came out and he said, you know, the CAPE is higher than normal, but it's priced reasonable when you compare it to interest rates. And Grantham is like, well, that's not really, I think what he said is that that's not really like a fair way to look at the world. And that, like, I think if you really boil it down, his argument is that the wealth effect is what everything is a bet on right now. And that when that sort of bet goes away, you know, we're sitting on a bubble of epic proportion. He then advocates something like, I don't know, 70% emerging market value and 30% cash if you have the stomach for it. I'm not quite sure how the emerging market value. Oh, we're still live. It works.
Wow.
This is amazing. Our tech on this podcast is like by far the best tech.
Strong. Quite strong.
Yes. Our host is gone, but somehow we continue to stream. That's called a robust system.
That's right.
Yeah. So anyway, I don't know. Like it's I don't know what to do with this information. And then, you know, I listened to another podcast with Howard Linsden, which I thought was really interesting. Like he has interesting thoughts. And like
what was he saying?
Well, I think that the title of the podcast was like, you know, fundamentals, fuck fundamentals or something like that. Like basically, you know, like I listen to it for yourselves, but like I think that his theory of the case is that there's very rare assets and those assets accumulate value, and he's just going to keep buying those assets without too much regard of fundamentals and price because like they're going to grow and they're the future. And I don't know. Then I listened to I had a big podcast weekend. This is what happens when you're in quarantine.
Yeah.
Then I was like listening to Leon Cooperman, and he was talking about the Nifty 50, which I'd need to go back and look, but I think this is right. You know, and that was like 60 PEs with, you know, an interest rate of 6%. So we're definitely not there. So I don't know. I don't know what you do with all this information. I do think that, like, you know, when the history books are written, if this is sort of like a bubble or whatever, and you say, well, you got crypto speculation, you got the NFT thing, you got valuations, like it's obviously a top. I'm not so convinced it's obviously a top, but
it'll look,
you know,
obvious in hindsight. It always does. Yeah. But that's tough. It's never obvious in the middle of the fight, right?
Yeah, well, and like I just think like there's, you know, I was looking at Google and I think Facebook, like all these things seem to trade somewhere between a 3 and 4% free cash flow to common. You know, like growing 20%, you grow 20% for 5 years and you look through, you know, you look 5 years out, all of a sudden you're at like a 6% free cash flow yield to common. Probably it's actually probably too low. It's probably closer to 8 or something. Like that's not that inexpensive, or that's not that like crazy rich. But you need the growth to come.
Yeah. How big are you at that point after 20 years or 20% for 5 more years? That's a big number.
Yeah, I think my data sources are not good for consensus, but I think that Bloomberg, what I saw was like 100 billion in free cash for Google, for 1.8 trillion today or something like that. I don't know, like that's not a crazy multiple to me. Like Google at terminal value is not going to trade at, 7 times cash flow or something like that. That's a hard thing for me to process. But there's some stuff out there that's really got to grow into the multiples. I should say the valuations, forget the multiples. Sometime I was listening to our conversation, plug for the Business Brew, Jake Taylor, guest on it. It was a good one. And I think I said multiples and I really meant valuation. So I want to be more precise from here forward.
Yeah.
They're connected, but different. So anyway, I don't know. I don't know what you do with the information. Like, I really don't. I mean, the answer is head down. But if you're dealing with the thesis of we're all in a wealth effect, then your earnings are all artificially like your earnings are all way too high. Because if the wealth effect implodes, no one's spending money. The E that you're underwriting is way off and the cash flows are way too high. So what do? I don't know. You go to cash? Maybe.
Yes. Well, we're back to full circle of financial repression is real and powerful and it hurts.
Yeah. And again, like, it's not the nifty 50, right? Like back then you had things that were trading at like a 1.5 times free cash flow multiple, and they weren't great businesses like Sears. I know it was a great business back in the day, but like it was kind of GE plus retail. So had some good spinoffs, but I don't think we're there yet.
I went into the matrix. What's the single thing that Grantham relies on?
Everyone is too wealthy and it's all going to implode.
What about valuations?
Well, I think that has something to do with it for sure. But like, so housing, there was a chart on housing today about how it's gone higher than the previous cycle. Well, if you look at debt service coverage, housing is very affordable when you look at like what the rates are. I think where Grantham and I could agree is there's a version of the world where prices come down and everybody's locked into their current house, right? Because you can't sell your house because your equity is wiped out, but you can somehow afford your mortgage. Like, I could buy that, but I don't know that means, like, I don't know that that's a catastrophic outcome. It's definitely shitty for liquidity, though.
I mean, that's sort of like what happened in the last housing crash, wasn't it? A lot of people just couldn't move. They just stuck where they were until whenever, 2015, probably.
Yeah. But currently, when you look at the consumer balance sheets, they're very good. So you need sort of his version of the bubble to implode for the whole thesis to play out, which is fundamentally the thesis. But I can't, my brain is too simple for these big thoughts.
I don't know if it's helpful to speculate about them. I just don't know. Like, it's, on one hand, you can see the index is pretty expensive, but then interest rates are really low. In the US, interest rates are really low.
It's just the total. Sorry, man. Yeah, well, I'm telling you, it's going to be the Jake and Bill show.
Yeah.
That's ideal. You guys
ratings are going down.
Yeah, that's right.
Ratings are going down like interest rates.
Yeah.
Negative.
That'd be positive. All
So,
right, fella.
I don't know.
Let me take a shot at mine while my internet's working, and then we'll see what happens. So GMO has their 2Q 2021 commentary out, and the whole thing is dealing with the myth versus the value growth debate. We've heard that a million times, but they've got I just thought they had some interesting statistics in here, because they said after the 2 best quarters for value in at least a decade, the second quarter of 2021 saw a return of growth stock leadership, and that continued into July. But the interesting thing is just that the 2 greatest periods of value in our lifetime, or in his lifetime, this is Ben Inker, I think 1973 to 1977, 2000 to 2002. In both of those, so in the first one, large cap value outperformed growth by 94%. In the second one, large cap value outperformed by 114%. But within those two sort of astonishingly pro-value periods exist some of the best months for growth relative to value on record. 6 of the best 10 months for US growth versus value in the period from 1971 to 2019 occurred in those two periods, which make up only about 13% of the total months. So I guess my question is, that you see that phenomenon also when the market crashes. Like the best months for the market are where the market crashes, and then in that very volatile period during the crash, you often see the best months for the market. Is that the same sort of phenomenon here? Do you think you got a growth crash and you see growth do better in that period?
I think you can't have capitulation without teasing and some hope that it's over before it hits you again on the head, right? And I think this might be a similar phenomenon. There's no full capitulation until you've just had your soul crushed.
The second time.
Well, like multiple times where you're like, oh, this is over. I can breathe easy again. Cut your head off, I
mean, that was the 2007-8-9 crash was just like that, right? It's like 14 or something, 17, like lower lows. That's you get a bounce and then it resolves itself at a lower low. And that goes on for 18 months until you don't care anymore. Like the 17th one, like why won't there be 18?
Yep.
I have no good thoughts on this topic.
They've got some arguments for why value. We've heard these before, but value's outperformance was due to an economic reopening, which is largely done or is going to reverse. Without that tailwind, value should lead again. Growth should lead again, rather. They've got some statistics that show that it doesn't make any difference what sort of growth levels are in the world as to which value or growth outperforms. It's sort of randomness. They look at everything from less than 2% to above 4%. And there's no real rhyme or reason to it.
I mean, I thought that letter, I thought some interesting things. The fact that growth traps underperform value traps. Like I thought that was kind of an interesting takeaway.
Yeah. Rates bro argument.
Yeah. Like the fact that a lot of growth has been multiple expansion. And like typically with value, you went on earnings expansion. Like I think that's something people may want to read. But also, you can go a lot higher before you go lower.
The prevalence of growth stocks. The prevalence of underperformance of growth and value traps is kind of interesting. Like it says 30 to 40% in a given year, which means that just by a random chance, you can be 3 years in a row. It's like there's a 3% chance that you're just stuck in a growth stock in a growth trap or a value trap.
Yeah. About that, I thought that chart was pretty good on the price to sales over 10, which kind of got famous from Scott McNeely when he was like, what were you thinking? And so they looked at the price to sales and like, how does that perform? And it was like, if you bought anything over 10 price to sales, like you basically got bond yields, right, over the entire, for a big data set.
4.4% real return, they say, versus 8.7% for the S&P 500.
So historically, it's not been a great base rate to pay more than 10 times sales. But in this recent iteration of the market, that's worked out okay.
If you had done it for Amazon,
it worked out really well.
You've made 18% a year. I don't know that this current iteration's over though. I don't think you can say that it's done really well yet.
Yeah, well, it's all a matter of time frame.
Waiting for you to capitulate, Toby. That's when I'll know that we're going to turn the corner.
I'll be those animals that last 10,000 years past the
and then die right at
capitulate.
The end. Last man standing.
Yeah, the only thing that I don't like. And I don't know enough about Sun Microsystems to really know, but like I got to pull up their financials. That whole like 10 times sales that would take me 10 years to pay you everything without cost. Like I think that's kind of a disingenuous statement. And I also don't know that corporate managers are very good at valuation, to be honest. I like you're not gonna trade a growth stock is not gonna trade at 10 years liquidation value. Like it's just not. So to be like I would have to pay you everything, like just kind of seems like a very flawed argument to me.
It's a manufacturer too. They are making real stuff and selling it, as opposed to some sort of software business.
Yeah, that's what I need to look at is like what were they actually doing?
You're taking a lot more out of the revs than you are for like a Zoom or something like that, right?
Yeah, like saying, it's 100 times cash flow. That is something that I understand a little bit better. And like we're only growing at such percent, therefore, what's your terminal value? Like that would be a more nuanced conversation that I think would have been more helpful to cite.
No room for nuance, Bill. This is not. It's not a good narrative. Fair. If there's nuance.
I just expect more out of them. Like I get what they were writing when they wrote that quote, but I think that quote sort of leads to some stunted thinking.
Agreed.
It's also in a world with like 6% interest rates on the 10-year too.
Yeah.
Oh, imagine that juicy yield.
Mike, does it really make any does it make any difference, do you think? Because isn't that that's your alternative? So the world is running at that kind of rate. Like you have to be running faster than that rate. We have to be yielding more than that over time to make that worthwhile. Like this is something I've just been thinking about. I'm just completely talking off the top of my head here. But if you like the interest rates at 1.5% or wherever we are at the moment, that just means that there's and it seems like we're going to stay in this place for a long time. Does that mean that maybe those old like 10 times sales is kind of meaningless in that kind of world, right? Like that might be a reasonable valuation.
Well, it all depends what your margin structure is and what your returns on capital are and what your returns on incremental capital are. Like, I don't think anything's special about 10 times sales.
It's if you're doing
50, yeah, but if you're doing like 50% free cash flow margins growing at 20%, like 10 times sales isn't that expensive. That's like, 20 times cash flow. That's not crazy. Growing 20%, like, you pay a shit ton.
If you bought See's Candy at 10 times sales in 1972, you did okay.
Yeah. And like these high ROIC businesses, there's a lot more theoretical cash flow to distribute every single year, and they don't need as much, right? But, it's just, I think parsing out which ones are really high ROIC and which ones are a lot of share-based comp is something that people probably could do a good job.
Yeah, and there's that. Yes, there's all this demand, and it's, I think that will probably continue, but we go back to that total eventual supply as well. And, I think if they're that great of businesses, historically, that attracts competitors. And that's,
I don't know that that's true anymore, man. And the reason
we have not suspended the laws of economics.
I think you may be wrong. I really do. And I think that the reason that I say that is I think that there is a very real possibility that we're building out global infrastructure, and scale advantages have always been something that have won. And I think that the size that people are racing to may preclude competition in the future. And that's a pretty dystopian outcome because I think it's really bad for labor and people generally.
So
but
do you mean like
a potential
Standard
outcome.
Oil and AT&T and all these other guys who have huge scale and network effects?
Well, what's different about what I would say is different about Standard Oil and like something like Salesforce is switching costs. I don't think that Standard Oil's oil was any different than Saudi Arabia's oil. I think that pulling out an entire enterprise resource system is really, really painful. And to get somebody to do that, you better offer like a way, way, way better product, especially since you've got all these people that are going to get fired if it goes wrong. And like these companies are racing to get installed bases. And that could be really valuable for a very, very long time. I think you have to at least acknowledge the possibility. If you're thinking in probabilities, I think saying no is not thinking.
I think where we differ is on timelines, I would imagine. I think you're right over maybe, I'm not sure what the timeline would be. And based on our extinction conversation, the timeline might be longer than I should originally think. But eventually, I don't believe that these are impenetrable moats.
Yeah. I mean, 200 years, fine. But like we just determined that that's not that long of a timeline, right? So like it's not impossible that that's the outcome here.
That would be wild.
I mean, it's a global game. if you get scale, you know, it's cost advantages.
I
That's
think
one
there's
of
probably
the things Buffett
there's
looks
got to
for.
be too much tribalism to have total global scale.
Yeah, that's what I was going to say. It's two poles, right? It's going to be east and west.
Yeah.
It's hard to imagine that there's not some blowback there in some kind of geopolitical way where you don't actually have like full global scale.
Well, this is kind of what I worry about. Like, if you talk about risk that's completely underpriced, I think that like this could lead to like huge. If the theory that I just laid out is correct, I think you could lead to like real bad political outcomes. Because you're going to have so many people that are just like left behind and are like, I heard somebody quote Chris Sacca or whatever that like, you know, there's going to be like 10 people that own everything and the rest of the world is going to rent. I don't think that the populace is going to stand for that. But, you know, I can't do anything about that. Those are big thoughts that are.
I'm not sure I'd want to be one of those
grade.
10 at that point. Would you?
No, not really.
Yeah.
Be living on Mars.
Okay, that's fair enough.
Yeah, with Elon, no thank you. You know, something I've been thinking that's kind of funny is everybody wants to live forever, and COVID was kind of like, all right, well, try that.
Extinctions.
Yeah. Anyway, you're welcome for the demonetization.
I did see a funny tweet that said like, I don't know the numbers of like how many people one in, I don't know, is it 1,000 or something of people who get COVID die? Maybe somewhere around there, I guess. But imagine if we had something that was like a 1 in 10 type of virality. Like things are already so screwed up from like, it's such a mess just from 1 in 1,000. Imagine if we had 1 in 100 or 1 in 10 or something.
It might not spread as quick.
Well, that's true. But
when those initial pictures were coming out of China with, I don't know if it was on like one of the conspiracy websites or
yeah,
not.
Zero Hedge.
Was it Zero Hedge? Yeah. And they were like people falling over on the street and they were like welding their doors shut. I thought this could be like a 1914 style Spanish flu that decimates the planet. You know, that's 1 in 10, maybe more than that. I don't think it's been quite that bad.
Yeah.
That'll cause some supply chain issues.
Yeah, that wouldn't be good. Anyway,
we've diverted 20s though.
I do think there's an interesting question in the comments. If we want to get back onto off of COVID and back onto the monetization path.
Yeah, remonetized.
So somebody's asking about Kraft Heinz, and like I said, you know, I think that if you think that Buffett and Munger are good at assessing incentives, then I think you also have to say, okay, well, how well will I do assessing incentives from the outside, given what has happened at Wells and now Kraft Heinz?
Can you give a little background about what Kraft Heinz?
Yeah, Kraft Heinz settled. I think it was like, it wasn't a ton of money, but it was like $70 million, which is more than a lot of people pay for, you know, accounting fraud and whatnot. And I just think generally more than this is just kind of the end of a story. But I think that 3G, you know, has underperformed certainly expectations. And there's a lot of annual meetings that you can hear Charlie talk about 3G doing God's work, you know, and like how it's really great for capitalism that these guys do zero-based budgeting and stuff like that. And there's a reasonable argument to be made that they really miss that. And rather than like go at them over it, I think it's a more important question to think about, if they miss something like that, what might I miss? I think that's more constructive than sort of Monday morning quarterbacking.
Yeah, that's fair. I think if it was 3G that was sitting here and wanted to push back a little bit, they would say, we cut the expenses that are non-strategic, meaning that they don't go towards delighting the customer, to allow the muscle and the reinvestment in things that do delight the customer. Now, whether operationally that has happened is maybe open for debate. And I don't know the answer to that very well. Because it's a lot of little decisions at the margin all along of where does money go inside the corporation. So, but theoretically,
Kraft, man, it's pretty hard to argue that it didn't backfire. I mean, they basically needed everybody locked in to like have a good quarter. Because they did well last year, right? When everybody had to cook. I don't disagree with you. I don't mean to cut you off. I do think in that entity, it's hard to argue that they didn't cut too far.
Yeah, I'm going to recuse myself from the conversation because I have some conflicts of interest with a family member that works at Kraft. So,
okay. Well, I'm sure he's or she is a great person, but I don't know. I just, it's
she is. I married her.
Oh, there you go. So I just think I don't know. I just think it's kind of it's an interesting thing to observe and think about, because they were pretty loud about, back before Wells, all the stuff came out. They were pretty loud about how Wells was great, and they've been pretty loud about how 3G's been great. And those in retrospect don't look great.
I think the other part that comes to mind for me is that culture can decay. And it's tough, probably, especially if you have allegiance to and like friends. And I think Buffett and Munger have both been very loyal to the people. They're kind of ride or die for the most part until someone, I'm thinking like Sokol. Then they're just like, off with your head. But in general, they're pretty ride or die. And so then, I think you're maybe makes you a little bit blind to, but it also, I think, is that loyalty gets rewarded with, maybe some deal flow that other people wouldn't get. So I think it's like it's not entirely obvious that like one way is the right way or not. And there's probably some balance that needs to be executed there. But I do see like that on occasion that can create a big problem for you if that loyalty and maybe not checking up as often as you should. I don't know.
Yeah. And the other thing is, it's the other side of leverage. I mean, I joke about loving leverage a lot, but like when it goes wrong, it goes wrong. And when you have interest expense, a lot of people in an EBITDA world like to pretend it's not a fixed cost. It's pretty freaking fixed. Like, you don't pay the bank, you don't get your company. So it can limit what levers you're able to pay. I think it's the big bear thesis on AT&T historically. Maybe that's changed now, but like all the debt and all the dividend created a fixed cost in that entity that may have prevented investment where there should have been investment.
I mean, that's a kind of a corporate wide phenomena right now. Not maybe more buyback than dividend, but leverage added, shares count reduced, operational flexibility reduced. Long-term thinking reduced.
Yeah, it's dope when it works.
Sure.
It's
dope for those
keep working
for those 5 years when you're this average tenure of the CEO. Works like a charm.
Yeah, and I think that stuff's important to think about. I mean, that's more where I'm at with this whole Kraft Heinz thing, is trying to reassess kind of what my priors were, and like, I don't see any good like going at those guys over it. But
it must have looked like a lock though, right? You got great brands, you got all of the grocery space that you need. It's hard to kind of figure out how that's going to go wrong, and then it's this like shift.
Yeah, and I think too, like they got attacked by private label. I mean, I don't know why. I mean, Postmarket said that Hormel has done fine. I'm not going to fade them. They're smarter than me. But like, I don't know. When I was in food at the bank, it was always like 2008 really opened consumers' mind to private label, and they were willing to trade down. And then once they traded down, they realized like, oh, this is actually really good value. And I think maybe the brands lost more value than they sort of realized, quicker than they realized. But I don't know.
Yeah, and all the DTC stuff like really kind of made people more adventurous, I think, on trying different brands.
Yeah, like Bud, I have fairly strong opinions on, right? And that like they're just like attacked by craft beer, and I mean, I think some of what people say about Bud is wrong, and I think some of it's right. But some of it's like Budweiser and Bud Light got kind of stale as brands. I don't know that was an investment issue as much as the world kind of changed on them.
Yeah, do you want to bet on the horse-sized duck or the duck-sized horse?
That's a good analogy. Yes, the 1,000 small ducks beat the horse. Like some, I mean, some people be like, well, they underinvested in that brand, but like, I don't know. Doesn't seem to me like you can't look at Miller and Coors. Their volumes have been crap too. Now Bud Light's underperformed, but like that's just a tough category.
Yeah. We got time for some questions?
Yeah, I got the world's worst internet connection here, but we'll see if we can.
Bill, can you
I
man
don't
the
even know if you
hotline?
guys can hear me or not at this point.
I can try. I don't know. Somebody had a question about Peloton. I don't have any good thoughts on Peloton. It'll either work or it won't.
Oh, okay.
You're welcome for that.
That's what they come here for, is the hard hitting.
Yeah. I got my subscription turned on yesterday. I had canceled it and it got turned on, and I'll be turning it off again. I didn't mean for it to come back on. So there's that.
Phantom revenue.
Yeah. Well, that's kind of the power of subscription businesses. You know, they can just like jam you.
I'll
tell you the other one.
Do
you get this? I got my 4-year-old or something got a hold of my wife's iPad. All kinds of charges came through Apple. It's like, what the hell? But it's my wife's account. How am I gonna dispute them?
What kind of stuff did he download?
Just like a bunch of monster truck games and stuff. But
okay.
You know, these damn games with the in-app purchases, they frustrate him so much. And then he's just like clicking. I got like $70 of charges. I was like, what the hell, man?
Oh man, I think you have something wrong in your settings if you could just like push buttons and make money disappear.
Yes, well, we had a talk as a family.
Oh, good.
30% goes to Apple. What a crock of shit.
Yeah, you just gave Tim Apple like $21 or something. Huh?
Yeah, for no value, like none. I got no value. I would have had more fun lighting the money on fire. Instead, I have this shitty like video game that has all the monster trucks unlocked. Great. I don't know. I don't see too many questions.
Oh, good. We answered them all already.
Thoughts on Porsche? I don't really have any thoughts on Porsche. Thoughts on QRTEA? Curate?
Yeah, what's the update on Zoom Curate?
Curate's crushing Zoom. We'll see. I don't know. I mean, look, the supply chain stuff is real. The way that business works, they need like
are cat sweaters currently supply chain
crunch?
Do
not, man. That's not right. We give the ladies the inventory they love.
Okay.
Yeah.
Grandmas love cat sweaters. So
the deal of the day, I'll tell you what, they have to watch cat sweaters because it's basically going to come down to the deal of the day is whatever vendor can fulfill the that
actual
size.
Order.
Yeah, that's right. So who knows? I don't know. We got nothing.
Yeah, what do you think? What if it's like, have you guys heard of the Gaia hypothesis before? It's like Mother Nature kind of pushing back in ways. It's like what if,
COVID
what if
coming out to push back against Silicon Valley saying that they're going to live forever? Yes, I have heard of this. I think it just happened.
I was thinking more about like environmental footprints and, supply chains and like pushing them back towards a little bit. Because I was just thinking like, well, you have all this shit inventory that needs to be moved now because we don't have other inventory that people really want. And maybe you'll just be happy getting that cat sweater because you just need an actual sweater like for the wintertime.
It's the thought that counts.
Yeah, maybe this is Gaia kind of shrinking the footprint a little bit of all these supply chains and pushing us back in our place a little bit.
Hang on. Somebody says thoughts on all the reverse repos. If you'll say more, open to. I need more details. I don't even know what the question means.
You're using a lot of big words. I'm gonna take that as offense.
Pretend you're talking to a 3-year-old because that's about this brain. Lumber was not a pump and dump. This is such a stupid comment. You can't pump and dump a fucking commodity market. Like,
whoa, Hunt Brothers. What about
Yeah,
that?
well, okay, but it's not like, I mean, it's a cash market. There was a lot of problems. People got speculative. Then people stopped buying lumber. Lumber crashed. Like people got too bulled up. Here's an amazing thing that happens when stock prices or lumber prices go up. People get too bulled up. Like that's what happens. It's not a pump and dump. So it's like, I don't understand the comment. It's like saying oil was a pump and dump. Okay. They pumped it out of the ground and then they dumped it into our cars. I'll agree with that.
Dumped it for negative price for a little while.
Yeah. Any good books lately? I'm reading Think Twice. I like it.
Oh yeah, Malboson.
Yeah.
And it's so smart because it says thin ice right in the middle of the. Did you notice that?
I don't. Green first.
Look at the
first
title,
all,
Bill. Come on.
hang on.
Look at if you look at it says thin ice in between Think Twice. It's genius.
I got to check that out. I'm going to come to defend Green first a little bit because my man Mike was involved in that. If you're looking at the stock price, then you may think so because you don't understand that there are 3 rights attached to every single share. Now, there's arguably ARBs that are in the stock, and we'll see what happens when it's all flushed out. But I don't think it was a pump and dump. I think that's not an accurate description. I can assure you Mike did not dump any. So to come at him or anyone in that way would be not correct.
I'm reading right now Kahneman's new book, Noise, and it's clear to me that we're doing so many things wrong as a decision-making species.
Customer as a society.
Well, yeah, I mean,
Both.
Present company heavily included.
Like responding to questions that are based off Twitter craziness that people aren't doing due diligence and get waxed in, and then they don't know the actual story and then they're saying stuff. Yeah, that's probably right.
Yeah, we're a little bit sloppy with our decision making, it turns out.
Yeah. I just, the thing about the pump and dump thing that bothers me is it's just not true. And that's a pretty heavy accusation to say without any facts. And if you don't know what was dumped and you can't say like this was dumped, then it's like you're kind of a schmuck for even saying it.
I thought we would moved on past securities fraud anyway at this point. That's what I learned. You don't really get in trouble for that.
Yeah.
So.
Nicola's still out there trading.
I'll tell you what looks dope is the Rivian.
Shocking.
Yeah, it does.
That Rivian truck looks sweet.
Oh yeah, how much is that gonna retail for?
I thought I read like 65, which I mean, shit, a Ford Fiesta is gonna be that not too long.
Yeah.
They're all very good at over-promising, those guys. So like those Rivians were supposed to be out like 18 months ago, and there's an SUV version of it. They're just nowhere near it.
That does not matter for valuation.
No, that's right. It doesn't.
EV space.
I don't know if they've managed to reverse. I don't know if they should SPAC themselves yet.
Who, Rivian?
Yeah, are they SPAC'd?
I think they're going to IPO.
Okay.
I don't know.
But
I don't. Yeah, I think the SPAC market. I don't think the SPAC market is
strong,
really ready to receive asset. I don't know. Bill Ackman's got a lot of money. Maybe he's the one.
Yeah, he's gonna rescue the whole complex.
That's right. He's got a nice promote waiting for it. So maybe he'll bring it public at a big valuation.
It's not like the incentives are there for him to get a deal across the finish line, huh?
Yeah, well, that is the fair argument to SPACs. The thing that I've been thinking about though is how different is that than an IPO? Because like all the bankers get paid, and you do these road shows, and you're like, the danger comes in a SPAC. You can actually show forward projections, right? But like, I don't know. I'd be interested. Anyone that has thoughtful comments on that, please let me know.
But that's fellas. Got the world's worst internet connection here. So
Toby, thanks for showing up today.
Yeah, appreciate it.
you really carried the weight.
Great.
Yeah, pretty much.